Let's head to Woodbridge, Ontario. Nick, fire ahead, please.
Gentlemen, good afternoon.
Hi there.
I'm calling about Brookfield Asset Management, and I bought the stock about a month ago or thereabouts at about 43.5, and I understand these guys are some of the best money managers in the world and asset managers, and from Brazil to Timbuktu, but they're very sharp in that they they go to some political areas, but boy, they're smart to stay away from other political areas. And I looked at a 10-year chart, the stock's up 200%.
Wow.
5-year chart, the stock's up 98%. This is your classic buy and hold because unlike other stocks, let's take a Suncor, it's been dead money for 10 years. So could you tell me if you had to go somewhere, would you go to either Suncor or to Brookfield? Thank you.
Well, doesn't mince words.
we're sort of talking apples and oranges.
Okay.
I'm going to say I'll say a little bit about energy. We think that the energy trade is more of a trade than a long-term hold.
Okay.
Right? You had a blow up in 2014 into 15. You had a recovery over the last year. There are some companies that are very low-cost producers that we think will do well. We think some of the pipeline companies will do well. But because the nature of finding and lifting oil has changed, it's become mass manufacturing. When you drill a hole, you got a 99.8% chance of success. So realistically, if price goes up, supply will come on because people can raise money for certainty, right?
And let me just, sorry to interrupt you, Dave. Let's put up a 10-year chart for Suncor because from the numbers I'm seeing, over 10 years, the stock itself is down 5%, sure enough. But if you reinvested the dividends, you'd have had a total return of only about 1% a year. No great shakes, yeah.
So I would just say that when you look at the energy right now, this is more of a cyclical trade than a long-term secular trade. Okay? Secular meaning multi-year. Brookfield Asset Management, look at what a great business. Asset management, get paid a fee to manage assets, and you do a good job buying them, then people will give you money to manage for them, and they'll pay you an ongoing fee. Brookfield's done a great job of building a very diverse set of holdings, and they've had very, very steady growth in the cash flow. So technically, the stock has just broken out. If you look at it the way most of the world looks at it, in U.S. dollars, because realistically, this is a big multinational business. Stock's just breaking out. We like asset management. I prefer asset management in developed market public equities today. I think that that's sort of where things are going. But I think that Brookfield Asset Management would be a very steady hold.
And I'm just looking at maybe we could put up the old 10-year chart for Brookfield as well. And I'm showing a total return, dividends reinvested in the security. You've more than doubled your money, a return over 10 years of about 8%, reinvesting the payouts.
It's a great company, and it's consolidated over the last couple of years and looks like it's about to start another leg higher. I think this is a good time to be entering the stock.
Okay, annual return just over 8% over a decade. Richard in St. Thomas, fire ahead, please.
Yes, Andrew, thanks for taking my call. I hope I'm comparing apples to apples. We own KKR, but my question is on Blackstone Group, and which would be the better company to own? Thank you.
Two big private equity and an asset manager.
Yeah, so I'm gonna argue this a little bit. I would steer you more in the direction of like I said a minute ago, an asset manager that's focused on public market equities, right? Asset classes are always being revalued, right? And certain times, certain asset classes do better than others. And we have just gone through a period of 10 years where regulation and compliance and rules around being a public company went through the roof, and it became very, very expensive. And so during that period, investing in private companies became very attractive because they didn't have the same problems. The interesting thing is many private companies today trade at higher valuations than public market companies, yet public market companies are liquid every day, can be bought or sold.
You know what they're worth as well.
Yeah. So we think that we've entered a period of many years where public market equities and developed markets are likely to outperform. So the asset managers in that area are under-owned and unloved. There are things that are changing for the better. Multiples are expanding in public markets. And so I would steer you more towards an asset manager in wealth management, something like a Morgan Stanley.
Okay.
Okay. Than something like a private equity type money manager.
Because Blackstone, I mean, they have some equity, but they're also in private equity and real estate and you name it. Yeah.
That's right. I just think it's not the right time to be focused on private equity.
Stay tuned. We got the past picks coming up next, and David did pretty well in paint. That's after the break.